Have you ever wondered how Costco continues to thrive no matter what the economy is doing? From $1.50 signed hot dogs to billion-dollar balance sheets, today we're diving deep into why Costco Wholesale is one of the most powerful and underrated investments in the market right now. Stick around to the end for a full breakdown of the risks, the price targets, and whether Costco is a buy, hold, or sell right now. Let's get one thing straight. Costco isn't just a retailer. It's a subscription-based powerhouse. As of early 25, Costco has around 39 million cardholders. That's up over 7% from last year. And get this, over 90% of them renew their memberships every year in the US and Canada. That's not just brand loyalty, that's a moat. Those membership fees, they generate billions in recurring revenue before customers even buy a single product. It's this flywheel of loyalty, low prices, and massive scale that makes Costco a retail fortress. Let's look at the numbers from Q1 25. Costco reported net sales of $61 billion, up 75% year over year. Net income? $1.8 billion. That's about $4.04 per share, compared to $3.58 a year ago. Global same-store sales? Up 5.2%. And if you strip out gas and currency effects, it's 7.1%. And they're not just crushing it in stores. E-commerce is up 13.2% year over year. Costco's app is cleaner. The online inventory is expanding. And delivery is faster than ever. They're building a digital layer on top of their in-store dominance without losing their identity. And Costco's just getting started overseas. New stores are popping up in China, Japan, and France, all part of a steady international rollout. They're not growing recklessly. Every store is strategic. Every location is carefully chosen. Costco's Kirkland Signature brand continues to be a secret weapon. High-quality products, lower prices, and unmatched loyalty. About 25% of Costco's sales now come from Kirkland. That's huge. It keeps customers coming back, and it boosts margins without hurting the customer experience. And don't forget the financials. Costco's balance sheet is rock solid. Over $13 billion in cash. Minimal long-term debt. Low operating costs. High inventory turnover. Strong free cash flow. This gives them flexibility to grow, expand, and return capital to shareholders without sacrificing stability. And they've done just that. Dividends, buybacks, strategic reinvestment. Costco is disciplined, efficient, and built to last. Now let's talk stock performance. As of May 2025, Costco is trading at around $1 per share. That's up roughly 13% year to date. It's trading above both its 50-day and 200-day moving averages. The trend is strong, and the stock has room to run. RSI is sitting near 55, right in the sweet spot. Not overbought, not oversold. But here's the question on every investor's mind. Is it too expensive? Costco trades at a forward PE ratio of about 37. That's higher than most retail stocks. But this isn't most retail. You're paying for quality, for predictability, for consistency. Still, there are risks. If growth slows, that premium valuation could compress. A weaker consumer could hit discretionary sales. And macro headwinds, like interest rates or trade issues, could weigh on sentiment. There's also the digital challenge. While e-commerce is growing fast, Costco still lags behind giants like Amazon in scale and logistics. They'll need to keep investing to stay competitive online. Labor costs could rise too. But here's the twist. Costco already pays workers better than most retailers. That results in lower turnover and higher productivity. In many ways, it's a strength, not a weakness. And then there's competition. Walmart, Target, Amazon, even dollar stores are encroaching on value territory. But none of them combine the warehouse club model with a paid subscription base at the same scale as Costco. Costco doesn't advertise. It doesn't do seasonal sales or gimmicks. It just offers real value every day. That's why its members stay. That's why they spend more each year. Let's talk about consumer behavior. During inflationary periods, shoppers trade down. They look for deals. Costco benefits from that shift. And during boom years, Costco thrives on volume and higher ticket purchases. It wins in both conditions. And think about this. Costco's business model thrives on efficiency. Fewer SKUs, no frills stores, fast turnover. It doesn't waste space or time. Every product on the shelf earns its place. That discipline translates directly into better margins and better value for customers. Even the parking lots are efficient. Big, simple layouts. No flashy decor. Just inventory and volume. It's retail minimalism at its finest. Now let's zoom in on a key long-term catalyst: international growth. Costco is still underpenetrated outside North America. In countries like China, where the first few locations saw customers lining up for hours just to get in, the potential is massive. As middle-class populations grow and value-conscious shopping becomes global, Costco's model is perfectly suited for replication. But it's not a copy-paste strategy. Each market is treated differently. Local sourcing, culturally relevant products, adjusted store sizes. It's a thoughtful, high-margin expansion that could fuel growth for decades. Now let's talk about something often overlooked: Costco's culture. Employee retention is one of the highest in retail. Associates are paid well. Many have been with the company for over a decade, and that translates to better customer experiences and higher store productivity. It's the classic Buffett principle. Treat employees like assets, not expenses. And yes, Warren Buffett is a long-time admirer of Costco. In fact, Charlie Munger sat on Costco's board for decades and called it one of the best-run companies in America. Let's not ignore the impact of that leadership influence. A company with a clear philosophy, a long-term mindset, and a reluctance to chase quarterly noise. That's rare and valuable. Now let's look at macro conditions. Even with higher interest rates, elevated inflation, and consumer uncertainty, Costco continues to grow traffic and sales. That speaks volumes about pricing power. Not the kind that gouges, the kind that earns trust, the kind that works across economic cycles. Think about this. If you could only own one retailer for the next 20 years, would you really choose anyone else? This is a business that does better when people are feeling the pinch and still delivers when wallets are wide open. Let's wrap this up with the investment thesis. Costco is not cheap on paper, but it is consistently excellent. And in a market flooded with hype and volatility, consistency is exactly what long-term investors should be looking for. Its growth drivers are real: membership expansion, international scale, private label dominance, digital evolution, and strong customer retention. Its risks are manageable: valuation, macro headwinds, and online competition. But all of these are buffered by Costco's financial strength and disciplined execution. For value-focused investors, it may require patience or a pullback. For quality-focused investors with a long-term mindset, it's a buy now and hold forever kind of stock. So is Costco a buy? If you want a low-risk, high-quality compounder with durable advantages and long-term visibility, then yes, Costco is a strong buy. It's not flashy, it's not trendy, but it is powerful. And that's what real investing is about. Let us know. Do you shop at Costco? Are you invested in it? Or are you waiting for a better entry point? Like the video if you found this helpful, subscribe if you want more real-world investing breakdowns, and share this with someone who thinks great stocks have to be complicated. Thanks for watching, and we'll see you in the next one.